Good day, fellow investors. Apple is a great business. If we check Warren Buffett's portfolio, Apple is 42% of his stock market portfolio. Thus, if Buffett likes it that much, it might be interesting to follow on this YouTube channel. Plus, he constantly increases his position, especially if the stock drops below $150 per share. And when it comes to Apple's business analysis, it is a pretty simple, straightforward business, and I like it very much that they have just 82 pages in an annual report. They tell you what matters, and there is no other noise as with many other companies. Pretty simple. The business, risk factors, this mine safety disclosures is just there for the template. Don't worry, no mines there. And that's it. Simple, straightforward. If you look at the business, we all know about the business. It is selling products, iPhone, Mac, iPad, wearables. And then on that ecosystem of 1.8 billion active devices, they also have services, advertising, Apple Care, cloud services, digital content, payment services. And what is very interesting is that those services went up 12% in sales over a year ago, while total revenues were 2% growth, but that also depends on the iPhone cycle, new purchases, new buys, and especially 2020 was a tough comparable given everybody was at home on their phones and computers. So very stable even with the pandemic and still growing and still positive. Now, when it comes to risks, there are always risks. So whenever you invest in a company, always try to read the risk part of their annual report because they will tell you everything pretty straightforward. Of course, there are macroeconomic, industry risks. In summary, we have competition, supply chains, political risks, legal risks, customer preferences, technologies. If there are sanctions to China, we'll see later also, that might hit Apple severely. Again, sanctions in supply chains. Where do you get those chips? Where do you manufacture the phone? Competition, you never know. Apple has a pretty stable ecosystem, but for now it looks stable and good to mention, but as I said, you never know. Now, let's look at the numbers so that we can do a valuation. If we look at the numbers, 10-year numbers, revenues increased more than 2x over the last 10 years, thus strong, stable growth, and net income followed suit from 41 billion to the current, let's round it up to 100 billion in net income. However, we must see that earnings per share went from 1.59 to 6.10, so almost quadrupled, while net income was just 2.5x. This is because Apple was very strong in buybacks, as the free cash flow per share is pretty straightforward, similar to the earnings per share, so no shenanigans there. Free cash flows can be used for dividends and buybacks, and that is what Apple does. And those buybacks decrease the number of shares outstanding from 26.5 billion 10 years ago to 16.5 billion now, which is a huge decrease in the number of shares outstanding, which means that you as a shareholder own more and more of Apple, and therefore you see this earnings per share growth growing faster than revenues and net income. So now that we have the numbers, the earnings per share, $6 per share, free cash flows also there, we have to estimate the growth rates in the future. And we have two growths to estimate here. One is the growth of the business, how fast will Apple grow in the future, and the other is the growth in earnings from buybacks, earnings per share. Now, 100 billion in earnings, cash flows per year equal. Of that, they're using 85 billion for buybacks and 15 billion for dividends. 16.5 billion shares outstanding, thus earnings per share are $6 per share. When it comes to growth ahead, it's likely going to be slow and steady on the iPhone, inflation, everything. If it is 10% of services, when we summarize that, it will likely be more than my 5% business growth ahead expectation, and that is then a very, very conservative estimate, but that's business growth. Let's say they increase prices a few percentage points and everything, and sell more as the world grows. And then we have also buybacks growth in earnings per share that transform into earnings per share growth, and the more they buy back, the more earnings per share growth you have. The market cap is now 2.5 trillion. If we divide the 85 billion spent on 2.5 trillion per year, you get another buyback yield of 3.4%. So 5% conservative business growth plus 3.4% total growth, 8.4% to be expected ahead from Apple. If we go to our intrinsic value table that's free for you to download here on YouTube in the link in the description below, the premium one is on my research platform. If we click on Apple, I have used cash flow per share or earnings per share. The dividend, the present value of the current earnings is 13% of those earnings because they are paying that 13% out in dividends. The rest goes into buybacks, which I am including into the growth rate. So 8% growth rate over the next 10 years, year by year. If I use a 7% discount rate and the price earnings price to cash flow ratio of 20, I get to an intrinsic value of 130. Of course, that is a little bit lower still than the market, but where the market is going, it might hit that pretty soon. If we increase the growth rates a little bit, then we are 140. If we decrease the growth rates, but this just means stagnation, just growth from buybacks and lower the terminal multiple, then we still have to see another 50% down. So when it comes to valuation, you have to see how Apple as a business fits you. That's the key. Will your discount rate be 10%, and you can play in the template, or 5% or 15%, depending on the required return you have. And then you compare Apple's stability as a business, extreme cash flows, what it does, how it grows slowly and steadily over time. And then you have to see at what price it best fits you as an investor. Apple is Apple, so it is not that much about Apple. It is more about how and when it fits you. And you have to compare the 6% earnings, the 8.4% growth with the price you are happy to pay and how much do you want exposure to Apple. Of course, there are also investing risks to keep in mind. And the first risk is valuation. As I'm filming this Friday morning and prepared Thursday afternoon, it was a bad day for Apple or a great day for those who want to buy more, but the price earnings ratio is 25. I remember analyzing when it was 10 in 2016, so that is a risk. The second risk is the growth and iPhone cycle. It goes up and down, consumer preferences. Sometimes they should be good, sometimes less, but Apple is building an extremely strong ecosystem that is adding stability there. Then there is always the Greater China, Asia risk. Keep in mind that it is produced and everything, and 33% of sales come from Asia. However, this might be a risk, but also a reward. As Asia, rest of Asia and Pacific, 5 billion people grow, then they might be buying more and more Apple phones over the long term and provide more growth for Apple. In short, if the business or earnings per share keep growing at 8% per year, the stock over the long term will follow. That is the investing thesis, so likely to give you 8% per year. Warren Buffett is extremely happy with it. And now the question is how much to add to our YouTube portfolio and why am I adding it to the portfolio? I want to put Apple in our educational, I repeat, educational YouTube portfolio. The plan is to follow 30 stocks over time, update on earnings, and Peter Lynch said that if you as a retail investor follow 20-30 businesses, it doesn't take much time, you know them very well. Apple is a business that we all know very well. You can do extremely well as an investor if you just buy at the right time, size your positions at the right time, and see at what return from the fundamentals the stock best fits you. I have another interest in following Apple. This is transcript from Seeking Alpha. You can read all the transcripts there. If you need a discount on Seeking Alpha of 60% on the premium, you can click on the link in the description below and it lowers from $250 to $99 or something. They gave me that. Why not share it with you too? Why I like and I must follow Apple? Because it gives you operational news that is hard to get anywhere. For example, here a question from Amit, and they are asking, are you seeing any implications from recession fears or inflation fears to your end demand? And then Tim Cook answers, and he gives an operational answer that you are unlikely to get anywhere else. So I'm very happy in following Apple each quarter, doing an update video, because it will give me a great perspective on what's going on in the world, whether people are buying more Apples or less. So we do believe that we saw macroeconomic headwinds that impacted our business and our results. That's okay. But when you look at the product categories, there was no obvious evidence of macroeconomic impact during the June quarter besides Forex, etc. So no evidence. People are still buying those phones and everything, which means, okay, that quarter was good. Then some other times they were discussing China, how the businesses evolve, the connections there, because they are the biggest business in the world. So if you follow it, you will know how the biggest business is impacted, its influence in the world, and that's also why I want to follow Apple. A lot of you from Europe own Apple, as it was the most traded stock in Europe in August, 10th on Robinhood, I think. So I really think that adding Apple to the YouTube portfolio is a win-win for both of us. And then again, it is a great business. I did buy it at the price-earnings ratio of 10 in 2016. So this was the article, March 30, 2016, 40th birthday of Apple. And I thought that long-term you cannot go wrong. It was a buy. And of course, it did greatly over the last 6 years. That was a pretty simple investment there. And you never know, maybe it will be a stellar buy again in the future, but for now I'll go just small, include it in the portfolio, and then if it goes lower, I'll surely add more. So it closes at 10 o'clock in the evening here in Europe, and I'm just in time to buy Apple. We type in here Apple, looking for the results and how much to buy. Well, I will buy just a little bit because of the valuation and of the risks. And if a great business like Apple declines, like it did today for 5%, which is insane, but if it declines more, I will just keep adding more till we get a full position over time. This process may be there for years, that's normal, that's a given, but if you follow 50 businesses or 30 great businesses that you know well, Peter Lynch said that a retail investor can follow only 20 businesses. Here and there you will get great opportunities. That is also the purpose of this YouTube portfolio, so please subscribe for that. We will buy 40 stocks there, 6,000. Okay, let's make it 6,000 given the expensiveness of Apple. Submit it, transmit it for our YouTube portfolio, and it is still not there because the price isn't there yet. Let me see, 82. I have to cancel this and then buy more at a higher price. How much? 40 we said. Submit, transmit, order filled, 153.88 in real time. And if we now look at the portfolio here, we are just starting adding Apple. Over the next months, I hope to fill it to the 20-30 positions that I have planned, and then we will update on earnings, coverage, and everything. So 30 positions on YouTube, those that are more interesting to you, and I have 50 target for my research platform to cover the more specific, not YouTube material investments. And just speaking of risks, if you get the news of the stocks you have in the portfolio here on Interactive Brokers, it's an international broker. If you want to check it out, you can support the channel by clicking the affiliate link in the description below. But if I click here on the news, and you can immediately see one of the risks that can hit Apple. So US considering sanctions to deter China from invading Taiwan, also putting pressure on the EU to do the same. Okay, sanctions to protect your own production and everything, to be the hegemon in the world, to control the status quo as it is. Okay, we all know the story there as we discussed in the other video. But this could also be a big risk for Apple. That's also why the small position, because if China bans Apple from China and related countries, that's 30% of revenues going into dust. So also Intel's chief executive officer said doesn't believe China would invade Taiwan in the next 5 years, so calming things down because nobody wants sanctions, acceleration or something. Even if it might be beneficial for Intel in the short term, it's not in the long term, so also they are smarter there, but that is one of the risks when it comes to Apple over the long term. Maybe not a big risk now, but when those risks develop, you see how it hits the stock price, and only when it happens a risk becomes material. When it's just in the air like this, people don't really care that much about it. If you want to know more on my YouTube channel portfolio, please check the link in the description below. I'll also put all of these into the playlist, all that we add to the YouTube portfolio. Check my mistakes if you want to learn more from my investing mistakes so that you don't make them. Thanks for watching, and I'll see you in the next video.